Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Wednesday, April 16th. I'm just going to take us through the normal tickers, beginning, of course, with the UVIX, which is the 2x long VIX futures ETF, which closed yesterday on Tuesday, April 15th at a price of $50.80, being down nearly 2% on the day, but then bouncing. It looks like it's above 52.50 in the pre-market, up over 3.5%. And so if we do look at the chart over here, we did close below 54.60. We are trading below that level. Will we come down to around $40 a share? Or, let's see. I believe this level is at 36.90. And then I also do have the other alert down here at 30. And so, yeah, just looking at this chart, I have to say, I feel like we might be getting another spike in volatility, really just because, tariffs keep going up on China, now at 245%. I believe. And, I think that's probably just going to be escalating. And I'm getting a little bit antsy with the 3-day weekend coming up. We just got Thursday, and then Friday is Good Friday. So the market, I believe, will be closed on that day. And also, just since I'm thinking of it, put up the moving averages here. Hadn't seen this before, but we did test the 21-day moving average yesterday, which looks like it is at a price of 47.23, hit a low of 47.57, so just nearly getting to that level. And then the 200-day moving average is just below that at 45.06. And then we do have the 50-day moving average right around 39.23. Right around those levels just below us. So I think this could be going a little bit lower, but I have been seeing a lot of posts about, basically, things are looking kind of weak to the upside with the SPY and stuff like that. I went over the bearish cross or the death cross yesterday, and so that does make me think that we could be seeing another spike in this. So I am not getting my hopes up too high about this getting down to around, let's see, that where did I adjust this red box to be the bottom? At 40, it looks like. And so, yeah, that looks like it comes below, actually. This is 36, and this, oh yes, the yellow there, 39.23, that's the 50-day moving average, is below the red box there, but just barely. So, yeah, we'll have to see where this takes us, but, and I'm getting antsy about this going higher because I do hold a position in the SVIX, and so this is the 1x, negative 1x short VIX futures, or just, short VIX futures, no leverage on it. And I am hoping that this goes up to 14 here, marked in yellow, which is based on a Fibonacci extension, I believe. Yeah, right there, marked in yellow. And then also, as we did pull back down here, we did draw down. We bounced to about the 50% retracement there. That was around 22.52, hit a high here above that before coming down. And so from this more recent red retracement here, let's see, 50% would be up here. And so I'm being a little conservative with the 382 at 1469. Let's see, just looking at that. Yeah, so the 382 here compares to the 382 there. We definitely broke above that here. I'm just a little bit concerned that we don't actually get to that, because we are seeing, in my view, some weakness with the bounce here. We do see this little cross here, bigger wick to the upside, getting near the 236 at 1263, which also coincides with this red downtrend that goes back to the low from October 23rd of 2023. Have talked about that before. And then also the low from August 5th. And so considering that downtrend, we are still below that. That does coincide with the 236. So I feel like we might be getting rejected from there. And so I had actually adjusted my limit sell from 14 to 1263, because I have to accept the reality that I was early with this. I started adding at 18, which is, right around here where the cursor is. And I should have waited for the, let's see, 2-week period to end. That was, 10 bars here, 14. So 10 bars is 10 trading days or 14 days there. And the low was at $10 on April 8th. And so if I would have, bought at that low at $10, the way that I kind of viewed trading the SVIX was kind of counter to the UVIX. And with the UVIX, I'd be happy with a 20% swing because I'd be considering that I would not be getting the exact bottom. The SVIX is not leveraged. So I was thinking that, if I'd get a 20% swing with the UVIX, that'd translate to about a 10% swing with the SVIX. And so from that low of $10, a 20% swing would be, to $12 a share. But we did hit a high yesterday of $12.42. And so from that low of $10, that would have been 24.2%. But then adjusting that to the low that we hit, that was 9.3%. We're up, about 30% currently. And so that makes me think, I'd be getting a little bit greedy, getting to 14 because that'd be a 50% swing. And, I didn't buy the dip. And so I've got to accept the fact that my trade was not executed as well as it could have been. And from, if I would have been disciplined based on this 2-week, thesis with the SVIX, the VIX, and the UVIX, that, I missed this. And so I'd rather get out taking a small loss than hope to get a small gain before this does roll over. And really, why is the SVIX not leveraged, whereas the UVIX is 2x leveraged? Because the UVIX does have these massive spikes, or the VIX does have massive spikes. Otherwise, shorting the VIX, it just tends to, let's see. I guess over here, it just tended to go up. But in the market that we're in with the current president that we have, I think that this is probably just going to be going lower. So, I, in all honesty, kind of just want to be getting out of that. But anyways, let's flip back over to the UVIX just to look at the pre-market price action, flipping over to the 10-minute time frame. Just going to remove those moving averages. And so we can see that yesterday we did dip to a low of 47.57 before bouncing, being not too much of a drop relative to the open, but relative to the prior day close. There was about, like a 2% drop. We did float up into the after hours, hitting a high. Looks like during the pre-market, gapped up a little bit, a high of 57.70 before pulling back. And, but being up 3.64% so far in the pre-market. And then if we do look over at the VIX, maybe I'll throw up those moving averages again. Yes, testing that 21-day moving average at 27.96. The low from yesterday was 28.29, so being just above that pink line there, with the 50-day moving average right around 24, a little bit lower. It looks like at 23.10 is the 50-day moving average there, and then the 200-day is just below that, around 18.67. But yeah, so looking at this does kind of give me the feeling that this could be bouncing. And if we do compare it with the UVIX, that did go below the red line, whereas the VIX is still hanging out above that level. So maybe that acts as support, and we do maybe see some big moves over the long weekend. So that's kind of what I want to be prepared for. And so I am a little bit antsy holding the SVIX. But anyways, let's flip over to the SPY, and we can actually look. Yesterday, we did not see the death cross with this one. Maybe we've seen that today. Oh, still, ever so slightly not crossing there. The death cross, we still do have the 50-day moving average slightly above the 200-day moving average. It looks like the yellow line there, the 50-day moving average is at $570.98, whereas the 200-day moving average is at $570.56, so just about 50 cents lower, less than 50 cents lower, about 42 cents, I think, for 20 cents below the 50-day moving average. So no death cross here. And I should note too, the SPY is the S&P 500 tracking ETF, which closed yesterday on the 15th at a price of $537.61, being down about 0.25% and then continuing down about 0.7% in the pre-market. If I do remove those moving averages just so there's less clutter, doesn't look like we're getting up to, let's see, that orange trend line and 550.28, which is the 1618 from this Fibonacci retracement here. And that orange trend line is based on the pivot low from April 14th of last year, April 19th of last year, and then August 5th from, again, last year. Those two pivot points does look like that could be flipping to resistance. And also one of the posts that I saw on X was from Colin Gladman looking for a close in the SPY above 540. We did not get that. Hit a high of 543.23, but did close lower than on Monday. So I think that this could be pulling back to these levels, maybe the 382 at around 523 or the 50% around 515. Both of those looking like there is some support over here. So I could see that happening, but I could also see this breaking down to hitting new cycle lows here before maybe getting up to fill this gap here around 564, 565, right around there. But let's just flip over to the 10-minute time frame here so we can see that this did go up a little bit in the initial part of trading yesterday, but then faded lower, continuing down into the after hours before gapping down, hitting a low during pre-market of $529.41 before bouncing to hit a pre-market high of 537.37, and then now just kind of hanging out. Really, not much lower than where the after hours, not much higher than where the after hour session ended. So, we will have to see with that. But then switching back over to the daily, just considering, the volume here has been pretty low. So maybe we do see a pump in this, and that would, of course, result in the SVIX going up. But maybe we don't see that. So I think it's good to be cautious here. We're starting to see a little bit of weakness. And then looking over at the SPX, put up the moving averages, we can see that death cross there very clearly. The 200-day moving average is above, which is the blue line, which is above that yellow line there that you can pretty clearly see up there. Hopefully you can see that above the yellow 50-day moving average. But I should note that the SPX did close, and this is the S&P 500 index, did close yesterday at a price of $5,396.63, being down 0.17% on the day, and also, closing below $5,400, which would be similar to the SPY closing below 540. And so with this, the 21-day moving average is just overhead, around $5,500. The SPY looking very similar there, that coinciding here for the SPY with that orange uptrend. The SPX about the same there. And then if we do look at that 1618 that I was just talking about, this retracement over here, we can see that that is at a price of $5,542.10. We did fill this gap, though, it looks like, which, I think I just deleted that on the SPY because we have this gap overhead that's around $5,666.94. Maybe seeing some resistance there if we do break out higher. But like I said, I could see this rolling over. I think it's good to be managing risk, and whether that's trimming at a small loss or, just be preparing for this to roll over. So that is kind of what I am planning on doing based on my SVIX position. I don't have a position in the SPY or the SPX. I do, though, have a position in Bitcoin currently trading around or just below 84,000. Let's look at this. We have not yet done this, pullback coming down to around 81,000, testing that red downtrend going back to the all-time highs, I believe, that were hit on January 20th. And I got that red downtrend there based on that pivot high from January 20th, and then also the high from March 24th. But I could probably adjust that a little bit. There are other pivot points that I could have here with some prior pierces of that downtrend. So kind of good to take that level with a grain of salt. But it does look like we have, broken and held above it, which we have not yet seen. But, it could be just kind of a fake out before we retest it, or, maybe we just need a retest. It's not a fake out, breakout, just need a retest before going higher. Or if we do go higher, I think that we could be ultimately coming down to perhaps the $60,000 to $70,000 range, which is approximately, really, I guess it's just this range here from this alert I have at 60,000 going up to, these two alerts here at 72 and 69. 420, those would be dip buy levels for me. But, small dip buys, doing my daily DCAs, which I have upped recently because I just think that, between May and December, Bitcoin will be making all-time highs. So I'm feeling pretty bullish about Bitcoin, even though people seem to be not as excited by it as they used to be. We do see this bullish divergence here with lower lows in the stock price, or in the Bitcoin price, and higher lows in that RSI. So I think that this could be taking off. And then, of course, we did fill the CME gap from last weekend. We filled it basically at the start of trading on Monday. And also, I should note, too, my alert yesterday at 86,000 did go off. We can see a pierce of that here for the 15th. But now we are trading, right around that CME gap. So we will have to see where this takes us into the next day, into this day. And then looking over at Ethereum, currently trading below $1,600. Got kind of a bounce here from these green lines here, which this was the prior all-time high from 2018. Don't need to step back because I've looked at that enough. And then this trend line here kind of got that convergence right around 1,400. And we did pierce that level, it looks like, on April 8th, hitting a low of, just right around 1,400. Don't want to, really break it down lower than that because it depends on the exchange that you look at. The numbers are going to be a little bit different. But I could see this easily getting back to $4,000 perhaps by the end of the year, which is what I would expect. But I think it could actually get to 8,000. So I'm feeling good about Ethereum, especially as others are not too impressed by it. So I'm excited about this, but we'll have to see where it takes us. And then finally, let's look over at ticker symbol URA, which is the Global X Uranium ETF, which did close yesterday at a price of $22.73, being down about 0.5%. And here, it does look like putting some wicks up above that green line there, which does look like it is a trend line going back to these lows from August 5th as well as September 6th. Those are two notable days in the market. Tested that level, and we did test it again over here when actually we were forming. This would be bullish divergence here with lower lows in the ETF price, higher lows in the RSI here. And we did get a nice bounce following that, going up about 13% there before then rolling over, hitting this low of 1950, just above this 100% Fibonacci extension, it looks like, from this extension. That's just basically the same distance from here to here, same price change, but then going from this point down to there. So nearly got to that level. Maybe we do test it. Maybe we do revisit 19. But what I could see, or what I'd like to see, is a retest of 22. The low from yesterday was 22.65. Lower volume, bigger wicks to the upside. This looks like an inverted hammer, so that could be, that this is going to roll over, lower volume. Although we do see that the MACD is flipping green. And if we do look actually at some of the other tickers that I went over, let's see the UVIX. This looks like it could be flipping red. The SVIX Doesn't look like it's necessarily going to flip green. Like over here was a nice little gradient there. Maybe we do see that. And actually, coming back to this, we do see much more volume here than over here. And the volume did really just kind of diminish as this did go higher. So maybe we could hit 14 on this. I'm not sure, but really just kind of wanting to take some risk off the table for myself. But with URA, let's see, in the pre-market, it is down about 1.5%, trading around 22.37. The 1618 Fibonacci extension, is it here? Yeah, that I've drawn based on this. That is at a price of 22.14. Let's see where it hit during the pre-market low. It was 22.37. That's where it's currently at, it looks like. So, yeah, we'll have to see. Do we hold 22 and bounce to then get rejected from this yellow downtrend, which is based on this parallel channel here? Or does this start to roll over? And with that possibility, maybe I should do a Fibonacci retracement here from that low of 1950 up to, let's see, what was the high on Monday? The high on Monday was 23.22. Yesterday was 23.26, so being slightly higher. So I got to go with that to do this retracement. And then let's see, the 50% retracement is around 21.38. And then the 618 is around $21. So I'll leave those two levels up there. They might be, ones to be paying attention to, and I'll just lock that into place. And maybe I will make that, a green I'll make it a green retracement, suggesting that those would be dip buy levels. Really, I'd say 21, to 22, 22 to 21, somewhere around there. But yeah, and also 21.38 does look like that's getting into this consolidation here, and then a gap fill, which we've already filled. So I guess I should just leave it at that, but around 21 or just below it. So, yep, that is pretty interesting there. But anyways, I got to get headed to work. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more pre-market preps and videos like this. Thanks a lot for watching. Take care, you guys.